Ladies and gentlemen, there's a bloodbath on Wall Street and the stock market has crashed terribly. Today, I will let you know what caused the crash, how bad it is, and what are the underlying macroeconomics issues behind this, and what I think will happen for the next period onwards. Let's watch on till the end, shall we? So, there was a bloodbath on Wall Street, and the market has plunged largely caused by Donald Trump. It reignited the trade war fears with China. And let's go through the details. So, President Donald Trump gave a post on his True Social network, and he actually wrote this: something very strange are happening in China. One of the policies that we are calculating is a massive increase on tariff on Chinese product. So basically, Donald Trump is accusing China of very hostile behavior, and it has cancelled a planned APEC meeting with Xi Jinping, and now the markets are pivoting from record high to the worst day since April. So Trump, exact words, I'm going to quote them: China is becoming very hostile. So it's basically Trump characterizing what China US relationship is right now. And he also said that they are sending letters to countries to control the export of rare earth. Rare earth is a very sensitive topic to US, especially Donald Trump. And basically, he's basically accusing China of economic coercion. And he actually said that no, there's no reason for us to meet now. So the APEC meeting with President Xi Jinping is now cancelled. And he also threatened right now we are calculating a massive increase in tariff. So this is the threat that trigger off to the entire stock market. So the damage in the stock market is this, okay? The S&P 500 crashed by 2.7% in one day, and that's very serious. And the Nasdaq has crashed by 3.6% one day. The Dow Jones had crashed by about 2%. VIX shot up by 31%. This is the single worst day sell-off since April 2025. So I think this is something that we really should take it quite seriously. And of course, right, tech companies suffered the most. So you have Nvidia fallen by 5%, AMD fallen by 8%, Tesla 5%, Qualcomm 7%. And even the tech Chinese giant Alibaba, Baidu, Tencent were all down by 5 to 6%. And why did they suffer the most? Well, largely because a lot of semiconductors depend on China for components and sales. And the AI infrastructure is now deeply integrated with the Chinese supply chain. EV manufacturers rely on Chinese battery, and they are really quite worried about what has happened earlier this year in April will restart again, and that really caused everybody to really have a shock. Let's not forget that there are macroeconomic headwinds in US, and we are now heading in the 10th day of US government shutdown. So far, there are no economic data released. The Bureau of Labor Statistics and shutdown. Federal department's layoff is beginning, and there are a lot of uncertainties what's going to happen to the stock market. The oil prices has gone down. Actually, in the more positive light, because the Gaza peace progress is now happening, and unfortunately, because of the stock market sell now, the crypto sell now is even worse. I've got a friend who actually told me that the crypto was at a high of 120,000 for Bitcoin, and it went as low as 100,000 today, and now recovered a little bit. So I don't know what's the latest one, but in one day it went down by 20%. It's quite serious, very, very serious, right? So there's a lot of macroeconomic headwinds here and there. So Wall Street analysts are now commenting. Basically, for example, Art Hogan from B. Reilly Wealth, he says that our China relationship has gotten more difficult. Someone else said the profit takers are out in full force. Ray Dalio said that the US debt growth resemble pre-World War II era risk of civil division, and of course UBS recession. We don't believe that the current bull run is a bubble. So you have got a lot of mixed news around this one. I think that they could be all right. Okay, they could be all right, but the question is, what does it mean to the stock market in future? So my perspective is this: number one, I think everybody needs to stay calm. it's very likely that Donald Trump, not 100%, but very likely that Donald Trump will eventually pull back from a full-blown protectionistic fight with China. Uh, I'm not even sure whether China really truly escalated or Trump overblown it or just posturing to pressure Beijing to negotiate. And we've seen this happen again and again and again with between President Donald Trump and rest of the world and also with China. So I don't know why the market need to react so drastically. So I would just say that this kind of volatility is indeed significant, is serious, but it's not fatal. So this is a short-term spike, a spurious spike, and it does happen because of Trump and his behavior. So the market turbulence is just part of the investment cycle. This is not the first tariff scare that we've seen. We've weathered the first trade war in 2018 and 19, and then as well as the April one. So I don't think we need to be overly fearful. And I think market generally will rebound once the dust settle. So I don't think we need to panic through all this. Just need to ride through the volatility. So I think the 2025 right now is a different investment landscape. In 2019, there were trade wars and things was experiencing on the first hand and the first time, and so therefore people are quite shocked. But now, a situation a little bit different. So this 2025, we now have a big AI bubblish growth, right? Bubblish spike. And any kind of a bubble, whether small bubble, big bubble, or growing bubble, is always not very good when you face with external shock. So a pinprick trigger could be now Donald Trump making some comment, could just suddenly trigger a massive reaction. But I think if the fundamentals remain strong in the long term, I think we should be okay. So I think this has got nothing to do with AI, nothing to do with all the reasons why the growth is happening. So I think in the long term, I think we still be okay. So in terms of the long-term strategy, I would still stay diversified. I'll still stay invested. So if the market do crash some more, I'm armed and ready with dry powder or whack. If they do rise, I think that's fine. If they do rise stronger, I already told many people to rebalance, rebalance, rebalance. Those people who did, okay. Those who don't, I cannot tell you what you should do, but I think rebalancing is the right thing to do. So I got four lessons from this sell-off. Number one is that I don't think we need to react emotionally to what Donald Trump tweets and say. So they create a lot of noise and panic, but it's just noise. So geopolitics do create noise, but I don't think they create structural crashes. So I don't think you need to overreact. But there are two things I always like to say: diversify, diversify, diversify. Okay. Once you diversify, one, like for example, this time the stock market crashed by 2 to 3%, but the bonds shot up by 1.7%. So you can see that it offsets some of the losses. That's why I always believe that rebalancing to bonds is the right move. And also rebalancing also protects your long-term returns, when you have a spread of asset. So I will also say this, that this is also earning season, so a lot of results are coming out. I think those will matter more. The Federal Reserve rate policy will be coming soon. I think there could be a rate cut coming. And of course, let's take a look at how the artificial intelligence growth will be. So in short, this is the short-term storm, not a long-term crisis. So my closing message to everybody is stay calm, stay invested, okay, and stay diversified. So I think it'll be okay if everybody were to just follow this evergreen investment philosophy, and let's see what happens tomorrow. Okay. So if possible, I'll try to do a live stream and just to calm some nerves and give you the right perspective. I'll see you tomorrow. Bye bye.